Have you ever looked at a company's financial report and just felt completely lost? Like you were trying to read a language you've never seen before? Well, guess what? You kind of were. Today, we are cracking the code on the language of business itself, accounting. So stick around, and by the end of this, you'll be speaking the basics. But let's start with a big question. Businesses are always doing things. They're buying, selling, growing, sometimes shrinking. But how do they communicate all of that? How do they tell their story in a way that an investor or a manager can actually understand? In other words, how does a business speak? The answer is so simple, but it's also incredibly powerful. It speaks the language of accounting. And I really want you to think of it that way, as a complete language. It's got its own vocabulary, its own set of grammar rules, and it tells the full financial story of any organization out there. So let's just dive right in. To learn any language, you have to start with the grammar, right? The basic rules that make everything make sense. Well, in accounting, that grammar is all about one thing: making sure the story is consistent, logical, and most importantly, perfectly balanced. So what is accounting officially? If you look it up, you'll see this long definition: a systematic process of doing a whole bunch of things with financial info. But that first word, systematic, is so important. This isn't just throwing numbers around. No, it's a super reliable system for turning every single financial event into clear, useful information that people can use to make huge decisions. And that system follows a very logical path. It all kicks off with one single event, right? Let's say you make a sale. That transaction gets identified, then it gets recorded, and then it's classified with all the other sales. All that raw data eventually gets summarized, and finally, it's communicated in these formal reports. You see the flow? It literally takes us from one tiny transaction all the way to the company's entire financial story. Now, we get to maybe the most important rule in this whole language: the double entry system. The absolute genius of this is that for every single action, there's an equal and opposite entry. Something gets debited and something else gets credited. This simple rule is like a built-in fact checker that makes sure the financial story is always in balance. It's beautiful, really. This brings us to something that trips a lot of people up. What is the actual difference between bookkeeping and accountancy? Well, think of it like this. Bookkeeping is the how-to. It's the essential daily grind of recording all those transactions correctly. Accountancy is the why. It's the big picture. It's about taking all that data, interpreting it, and understanding the story it's telling us about the business's health and future. Okay, so we've got the grammar down. Now it's time to learn some of the core vocabulary. We're going to start with the nouns of business. These are the three big categories that describe everything a company owns and everything it owes. First up, we have assets, and this one is pretty straightforward. An asset is basically any resource that a business owns that has some kind of future economic value. Just think of it simply as all the stuff the business owns, from the cash in its bank account to the computer on your desk.
But, not all assets are the same. We have to split them into different buckets. Non-current assets are the big, long-term things, like a building or heavy machinery. Current assets are more short-term, stuff you expect to use up or turn into cash within a year, like inventory. And of course, some assets are tangible, you can physically touch them, while others are intangible, like a brand name or a patent, which can be incredibly valuable.
All right, our second core noun, liabilities. This is the flip side of the coin. If assets are everything a business owns, liabilities are everything a business owes to other people. This could be a loan from a bank or money you owe to a supplier for materials. And just like with assets, we break down liabilities by time. Non-current liabilities are your long-term debts, like a big business loan that you'll pay off over many years. Current liabilities are the short-term debts you need to pay off within a year, like the stack of bills waiting to be paid. And our third and final noun is capital. This is the money the owner has put into the business. Now, here's a really important idea to wrap your head around. In accounting, the business is seen as a totally separate entity from its owner. So from the business's point of view, capital is actually a debt. It's what the business owes back to the person who started it all. And this is where it all snaps into place. It's the elegant accounting equation. It simply says that everything a business owns, its assets, has to equal all the claims against those assets. And where do those claims come from? Only two places: what it owes to outsiders, which are the liabilities, and what it owes to its owners, which is the capital. This one simple equation is the foundation for everything. So we've got our nouns, But a language with only nouns would be pretty boring, right? We need some action. So now let's look at the verbs, the transactions that bring those nouns to life and keep the business moving forward. Let's start by clearing up two terms that can be super confusing: debtors and creditors. It's actually pretty simple. Debtors are your customers who owe you money. So from your perspective, their debt is an asset. Creditors are the suppliers that you owe money to, which makes them a liability on your books. Then you've got the other key verbs, the stuff happening every single day. Purchases, that's when you buy goods you plan to sell. Sales, that's when you actually sell them and make some money. Stock or inventory, that's just the goods you're holding on to right now. And finally, drawings. That's the term for when an owner pulls money or other assets out of the business for their own personal use. Okay, we have our nouns, we have our verbs. Now we can finally start putting them together to form complete sentences and tell the actual financial story of what's going on inside the business. Here is another really important distinction to make: expenditure versus expense. An expenditure is any time the business spends money. It could be on a huge new building, something that'll provide value for years. But an expense is way more specific. An expense is a cost you paid this year for the sole purpose of generating revenue this year, like your monthly electricity bill. And that distinction is so important because it gets us to the whole point of the story: profit. In the simplest terms, profit is what's left over when you take all your revenue and subtract all the specific expenses you had to pay to earn that revenue. It's the ultimate report card for a business. But profit isn't just one number. First, there's gross profit. That's your sales revenue minus the direct cost of making the things you sold. But to get the real story, you have to then subtract all the other costs like rent, salaries, marketing. And what you're left with is the net profit. That's the famous bottom line. And of course, if your expenses are actually more than your revenue, well, then the story ends in a loss. All right, we've learned the grammar, the vocabulary, and how to build sentences. So now for the final step, reading the finished book. This is where we look at the official financial statements that pulled this entire story together. And the most important page in that whole book is the balance sheet. The best way to think about it is like a financial snapshot, a perfect picture of the company's health on one single day. On one side, it lists everything the company owns, all its assets. On the other side, it lists every single claim against those assets, the liabilities, and the owner's capital. And if everything was done right, it will always, always be in perfect balance. So there you have it. You've got the key to unlock the language of business. You know the grammar, you know the nouns, you know the verbs. The only question left is, go look up the balance sheet for one of your favorite companies. Now that you can read it, what story is it telling you?